Grant Powell is a lifelong entrepreneur with a diverse background. He's been a stuntman, a contractor, a track and field star, you name it. Today, Grant owns and operates a branch of home financing solutions, the Mortgage Center, and his greatest joy is helping people achieve their financial dreams. Welcome to the show, Grant.
Thanks.
It's so great to have you here. You sound like I have a pretty diverse background myself. But I haven't written a book yet, and you've written a book, The Alternative Mortgage Financing, yes. Leveraging Your Best Option. You are really passionate about helping people achieve their financial dreams. So tell us about the book.
Yeah, it was through the years just dealing with different clients and seeing the obstacles that they face and the stories of overcoming different challenges and questions, simple questions that a lot of clients have, but they don't know where to find these answers. And a lot of the times it's actually better to get these questions answered before you go through start the mortgage process. So I wanted to sort of share a bunch of the information so that to help educate applicants that are looking to get a mortgage about the different types of financing and where to get it and what sort of things to look for as far as whether it's fees, hidden costs, that kind of thing.
You know, getting a mortgage, I mean, that seems like the simplest thing ever. You go down to your bank and you fill out the application, they tell you what you know, how you can buy a house. But there's so much more behind that, and you, having been in business for yourself, understand that a lot of people don't fit the old-time structure where they have a steady job, the credit's perfect, and it's simple.
Yeah, you're correct. It's especially with the new regulations, it gets tougher and tougher every year. And then also when you look at it too, people have so many more diverse types of income than they used to. A lot of people, they're entrepreneurs mixed with part-time income, that kind of thing. So it's many options that they sort of have to look for to better their chance of getting a mortgage.
So the meltdown in the whole financial world in 2008 was caused by essentially a lot of abuse of the whole concept of financing properties. And you talk about more regulations. That's all over North America. There's more regulations. So that means that it's important for someone that's looking for a first-time home, or they want to move up, or they want to take some money out of their house, to talk to someone like you.
Yeah, you're correct. It's having that plan in place, or at least understanding your options. So when you're looking at doing different types of financing or looking at possibilities, you actually know the process and you know the timing of when to do these certain, whether it's equity takeouts and stuff like that, in order to best leverage your existing property to either get more property or to pay out debt or that kind of thing. And that's what I sort of cover in the book. It's leverage your best options. So leverage what you have to make your options the best possible direction to make it come true.
So give me a couple of examples about that, because most people have most of their money, like the average person has a lot of money tied up in their family home.
Yes.
So you have ways of them accessing that money to provide a better lifestyle, but also in some cases to make more income for themselves.
Yes, correct. And it's the timing. Sometimes especially with debt consolidation or refinancing, it's the timing of making sure income and your credit is not pushed down to a low level before you actually take the steps to refinance.
Do you recommend that people do constantly have a look at what their options are if they're an existing homeowner? Because I know people that have done very well in just a steady job, but they start to leverage their increasing property value and go buy another property and start renting it out and build up. A friend of mine, when I was a police officer, he's a multi-millionaire today just from doing that.
Yes.
Buying up properties and renting them out.
Yeah, and it's true. It depends on the client's comfort level. Everybody has their sort of comfort level, and it's what I try to do is work with people to see where their comfort level is. Some people want to have multiple properties and want to be a landlord. Other people just want to pay off their mortgage. And other people just want to be able to have enough equity so when it comes time they can retire or put their kids through school, pull out equity to do that kind of thing. So it just totally depends. So it's I like to sort of not push too much on my clients, but give them the options and then let them sort of mull over the options, ask me questions, and then when it's time to go a certain direction, I'm there for the support.
So you often, I'm sure, deal with people who get turned down by the bank
Yes.
for whatever reason. So I think for most people, that's why they would go to a mortgage broker. What about if you got great credit and the bank is offering you, a mortgage? What's the value add for dealing with a mortgage broker there?
Well, I guess the biggest thing, it's a service. So yeah, if you're getting the service you like out of your bank, that's fine, right? But clients, I find through my experience, a lot of my clients want a true service as opposed to just getting an interest rate, because they're looking at expanding, whether it's their assets or looking at, like you say, buy another property, that kind of thing. So we kind of want to keep monitoring it. So it's more of a service. Some of my clients come back to me and say, yeah, I got this mortgage from my bank, and then I wanted to go in and do some things, but that representative is no longer there. So now I have to tell my story to somebody else that maybe either cares or don't really care about my future.
So you build a relationship with your clients over time and you're there for them at different stages. This idea of guys my age taking equity out of my house to help my kids, that's something that I never really thought about before, but I guess it's a reality.
Yes, it's a reality that with the equity in so many markets across the country, there's so many homes in so many areas that people have so much equity that it's almost too good to be true. But the reality is, using some of that equity, unlock some of that sleeping equity, and help out, like you say, your kids to get into their own home.
And of course, interest rates continue to be so low. The difference, it's so fascinating, the difference between what you pay on a credit card, 15, 18, 20%. And yet, if you can get more leverage on your home, you're down like 3%, 2% money. It's absolutely a no-brainer.
Yes. Well, and that's the thing too, is when clients, and I like to try to, if they are willing to work with me, we can show them so many different ways on how they can reduce their monthly expenses and save thousands on their mortgage and gain more equity. And that's exactly right. Like, a lot of people just realize they're just paying the minimums on their credit cards, and their credit score is going down on a monthly basis. But by releasing some of that equity, it's compounding how their mortgage payment might go up a little bit, but they can actually make lump sum payments back to their mortgage because their budget has so much more room.
So they could also be increasing their credit score by getting a bigger mortgage and having more room on their credit cards, which increases their credit score. So, I guess I get it. You're an expert. You're almost a financial advisor, not just a mortgage broker. So what does it cost me? How do I come and you write you a check, or what happens?
It's a free service. It's a free service.
There's no such thing as a free service.
Well, the good thing for you guys is, for clients,
Yeah.
I get paid from the lender to bring them the business of your mortgage. So there's only very rare cases. I think in my 14-year career, I think only one client I've ever, because the lender wasn't putting the fee there, I had to ask for a fee.
Right.
But
You have to get paid.
Yeah, but I even reduced the fee because I knew that this mortgage was the start of something bigger.
And there's also, it's not just the banks that lend money, there's secondary type lenders, there's even private individuals that invest in mortgages for people who maybe are rebuilding their credit. And you're connected with those type of lenders.
Yes, and those lenders are they're a great source of funds, but we typically want, the best thing about those lenders is you want to have a game plan in place to sort of get the client into those higher interest lenders and then get them out within a year or two. And so I like working with the clients with that plan in place and sort of implementing that plan.
So we have a lot of people that watch this show that are business owners themselves, and oftentimes they don't fit the boxes that the banks, it doesn't check
Yes.
off properly. So you can help them.
Yes, that's in this book. There's a bunch of alternative type financing especially for entrepreneurs that don't fit the regular bank mold, because there's all different options there, and the intention is to get those clients into whatever type of alternative financing to begin with, and then try to take those steps so that they are bankable.
So we promise to share with our viewers the top 3 mistakes that people make when they're taking equity out of their house.
And the number one mistake is people wait too long, especially when it comes to debt consolidation or people that want to start a business and they want to release some equity before they start the business. They wait too long to either their credit score is too low that we can't refinance them into a regular low interest rate mortgage, or in the case that they're starting a business, they wait till they started the business and then now we can't get them the lowest interest rate mortgage because they're not gainfully employed.
And by the way, note to self, every single time you start a business, you're gonna need more money than you thought you needed. So go
Yes.
get more money up front before you've gotten into business for yourself.
Exactly.
While you have a regular income, build up your credit if you're planning to start a business.
Yes, exactly. And then you can always, if you have excess capital, you can always, once your business is up and running, you can always put that back onto your mortgage.
Right.
So,
Number 2.
number 2 is fail to plan a budget. And I see that all the time with people that go into a renovation, and then they get halfway through the renovation and they've run out of money. So then they're not bankable now because their house is ripped apart. So we can still get them financing, but it's more of on a private type financing, so a short-term fix. So that's really important, and that's the same with, like you say, with the business for self, is planning that budget and maybe doubling it to
Right.
make sure you have those available funds.
Number 3.
Number 3 is with equity, and especially with the retirement years, if you've got a lot of sleeping equity, 1 out of 2 people in their 60s right now will live to 92 years old.
Yahoo! That's me.
So one of the things is a lot of people only have a savings to sustain the life till they're 75 or 80. So how do we go about structuring all your assets to make sure that you can have an awesome retirement and have enough funds available for your kids, say if they want to get into a mortgage or if you want to go traveling and that kind of thing. So it's planning with your financial planners, your accountants, your mortgage broker or mortgage planner to make sure that you're using all your assets to the best advantage.
Grant Powell owns his own mortgage brokerage firm. You're writing your second book, so I'm going to invite you back to Biz One-on-One when you've got that second book written. Thanks for being here.
Thanks.
Congratulations.
Thanks.